Hi, this is Zak Mir with the Bulletin Board Heroes here at Zak's Traders Cafe for Thursday, the 5th of October. Starting off with the FTSE 100, which is sliding beneath a falling 50-day moving average. The 200-day line still flat, which gives some hope, I suppose, but that rising wedge, the red lines there from back in August, are hurting this market. Below the 50-day line, 75.20, there's the risk of a break of 73.70, which was last month's support, and then the market rolling over to the floor of that February falling trend channel as low as 71.70. Hopefully the market will bounce, and already has bounced above 73.70, and then head back up towards that 75.20 zone, but at the moment looking rather precarious. Speaking of precarious, we have the DAX next, and here you can see that the support line there from May sort of kicking in. We had an overshoot of that support line, the May support line around 15,100. We're sort of consolidating in that area. If there is a rebound, it will be back to late September resistance around 15,500. But at the moment, that's the best we can see. A slight degree of bullish divergence there. So the lower low for October, but higher RSI trace. So that also may point this market up to 15,500. But with that falling 50-day line and the old 2023 topping formation that we've had basically since the spring, this market looking a little bit weak. Moving on to the Dow, and here you can see that we're well below the 200-day line there, 33,800. The next support area, the logical one, would be May support around 32,600. So we might have to factor that in as being a potential destination for this market. The positive is that the RSI is now well below 30, and basically in the recent past, bouncing off 30 has been the way at the low. So we had that in March, and there was a good rally there. So not surprising that this is more oversold than it was earlier in the year, because obviously October, not a great month for the stock market. Upside at the moment, 33,800, if we can avoid testing 32,600. Moving on to Bitcoin, and the picture here, one of a trend line break there, the July trend line break around 27,300. Above that, we're hoping for a break of 28,000 and recent resistance, as well as the 200-day moving average at that level, to take us up to 30,000 by the end of this month. But I think at the moment that's the most optimistic you can be. On the downside, a test of the 50-day line and the uptrend line from December at 26,500 seems to be a logical conclusion. Onto the stocks, and not that many, which is obviously not a great sign. Starting off with Arkle, which after a previous attempt at the during September, is having another go at the upside. The 0.5 pence area, a block on progress so far, but if we can get through the recent resistance 0.53, we could be heading up to 0.9 pence, maybe by the end of next month. So quite confident in terms of the turnaround, but not actually the short-term price action there. Moving on to stock which has changed its name, so to Critical Mineral, and here we've got the old Keras as it was, looking interesting. Unfilled gap to the upside today through the 200-day moving average at 4.3 pence. If we can stay above that, then we could be heading up to 10 pence by the end of next month, so a bit like Arkle, sort of that kind of formation. The current sort of block on progress is around the 5.25 pence area, but hopefully we can break that before the end of this week. 50-day line starting to curl up as well, which is a positive, and that gives us the hope that we can actually have that big breakthrough and head up to 10 pence. Moving along to a stock which I haven't looked at for ages, which is IMC. Here we've got a little mini bull flag here above 0.55 pence after the rally that we've seen already. Looking for a resistance line target, as I'm drawing at the moment, towards 0.9 pence. So that would render the recent recovery a rising trend channel base. And as long as we're on the right side of the 0.55 area, looking for up to 0.9 by the end of next month, that kind of time frame. Insig AI rather is next, and here you can see that we seem to be consolidating well at the higher levels, so above 24 pence, 24 to 26 pence, the recent resistance. And the view now is that we can get through 27 pence, and that resistance line there from back in October last year, we could be heading up as high as 34 pence at the top of the overall rising trend channel. Hopefully see 34 by the end of next month. Moving on to Orcadian, which has been the gift that keeps on giving in the near term. Here you can see that we had a down day yesterday, but we bounced off what was our previous target around 25 pence. Obviously, that was the second big target that we had. The first one was around 14, so 14.25, and then looking up to 40 pence by the end of next month, maybe by the end of this month, the way things are going. While we remain above that 25 pence level. A beautiful breakout there, and we're about a couple of sessions away from a golden cross, the 50 and 200 day lines both rising at the moment. On to SDX, which had a decent RNS today, which I didn't cover for a change. Unfull gap to the upside off the lows, and here you can see that while we're above the latest gap, 3 3/4 pence, we can head up towards the 200 day moving average at 6.3 pence, and that April resistance line projection in that area, and that would take the shares back to basically where they were back in April. But the key here is holding above the 4 pence zone. Last two. First one is Silver Bullet, which was a great riser last month. It looks like it's stepping up to the plate for another move. We've already had the golden cross after obviously extended run to the upside to start the month, and that may be enough to power the shares up to the next level there at £1.40 as soon as the end of next month. Obviously the key here is to have a sustained clearance of the 100 pence zone. Finishing off with Tertiary Minerals, and here you can see that we've got a V-shaped bull flag near the low, so that suggests that we've got another leg to the upside coming. If we can get through, I suppose, 0.15 on an end of day close basis, we could be up to 0.22 by the end of next month, and the news flow there improving all the time. The start of the rally was an unfull gap to the upside, so it was a bear trap gap reversal, and that has worked as a decent signal for the shares. That's it for me today. More updates tomorrow.